I think one of the commonly spread out phrase in the market or with anybody that's trading, it can be anything from stock to indices to currency pairs or anything else actually. And I believe that phrase would be buy low, sell high. In other words, buy when things are cheap, sell when things are expensive. But I think the reason why people are unable to internalize this simple sounding tip or advice is the fact that people don't necessarily know where high is or where low is. And I think from my explanations and the past videos that I've produced on this channel, I have expanded on it without directly saying it. But this is essentially the concept of premium versus discount. So on my part, in this video, I'm going to very briefly point out and explain the concept of premium and discount. ICT or Michael has defined premium versus discount as in, I'm just going to use a diagram illustration to make this a little bit easier. So we have a trading range of some sort. This can be distorted to whatever degree you see in the market, because nothing is perfect anyway. Well, not really, but yeah. So we have a market condition like this, right? Michael has simply defined this as measuring from the high of the range to the low of the range. And he says anything above this blue line is our premium, anything below is discount. So he says and teaches that premium evaluation is essentially anything above in the higher portion of the trading or dealing range. Of course, this can be affected by many things based on central bank decisions, order flow, and many other things. But in a very simple definition, this is the concept of premium versus discount. So if this is the case, the next question or next conflict would then be, how do we know what range to take? Because we have many range to work with. We can measure from all the way from that high to this low in this on this chart, for example. Does it mean we're in discount right now? Okay, what about this swing high over there and this swing low over here? Does it mean that we're in premium? You know, so there can be ambiguity to some degree when it comes to measuring a range, and I can understand the frustration, especially when you are a new trader with knowing how to select a range. So that's what I'm going to try and explain in this video. I'm not going to expand on any, I'm not going to just point out any random range, and I'm not going to just work on ambiguity. It will be 100% factual and logical. So the first thing we should keep note, take note of, is the fact that he mentioned that we are going to be looking at the 50% of any dealing range, right? How do we know where the 50% is, right? That's the first thing. That's where I'm going to come up with, I'm going to remind us all with the concept of opening price. I know this is a 3-month chart, but the point of an opening price is essentially to know whether we are in premium or discount for that day, or premium versus discount for the month, or premium versus discount for the year, or even the century. In other words, the opening price is critical to understanding where we are in price. Let's start with the daily chart. With a daily time frame, it's easy to see where we are in the month, right? It's easy to measure from the beginning of February, for example, in this case, till the end of February, which is there. We can easily see that this is the dealing range for the month of February. So that's the first thing I have to point out. If you want to work with a dealing range, deal with it using time. You can measure a range within a 1-week time frame. You can measure a range within a 1-day time frame. It can even be as small as a 90 minutes time frame or a 1-hour time frame. But we now have a dealing range to work with, the entirety of the trading done in the month of February. This is a dealing range. So yes, we have this measure in a way, but at the same time, this data is only shown to us after the month has ended. That's when we can pick out the high to the low of the month in order to find out where our middle point is, to know whether we're in discount or premium. So what then do we do before that if we don't have that data yet, if price hasn't printed the whole month yet? That's where the opening price comes in. We can see here at the beginning of the month, this candle is a bearish candle, so the opening price was on the top part of it. I'm not sure if you can all see it, but the top part is the opening price of this candle. In other words, the opening price of this month. This line, this yellow line that goes across the screen, is the one that I personally use to gauge whether we are in premium or discount. You can see we opened, traded in premium, stayed in premium, traded below into discount, short-term premium, went down, and then came back again to test premium one last time before trading lower throughout the course of the month. So this is an easy way to gauge and see when we are in premium or discount. It's a very simple, straightforward way. But of course, this is me speaking from a monthly perspective. What about a daily perspective, intraday action or something? That's still fine. That's still okay, because we can, if you trade in intraday, you're likely going to be executing from the 15 minutes chart. And if that's the case, then you would need to know the opening price for the day. That's the first thing. So in other words, the midnight price should always be on your chart. Let's go find the midnight price. It's all the way over here. So that's our midnight price right now. That's the first thing you need to know. Well, for the day, this is the thing that allows you to see whether you are in premium or discount. Obviously, drawing out this yellow line, we can very easily see that we are in premium. In other words, anything above this yellow line would be an opportunity, or we should be looking for opportunities to sell this off instead of looking for buying setups. So this is an example of an intraday. What if you are not trading for the whole day's range? What if you want to trade within one session? That's still okay, because each session has its own time zones, time frames, I guess. And let's enable that right now. Zooming out to the 15 minutes chart to make this a little bit easier to understand, we can easily see where the sessions are. So looking at yesterday's price action, we can see that midnight price is where the London session begins, and we trade all the way till 7 a.m. Then from 7 a.m. till 1 p.m. we basically have the New York AM session. From 1 p.m. till the market closes, typically at 6 p.m. That's when the Asia session starts, and then we go back all the way till the midnight price again for the next day. But what does this mean? Yes, we know now where the session ends and starts. If you don't, of course, just play this video back, you get the opening prices. But it now allows us to see, for example, here the London session has ended. New York session just started right now at 7 a.m. What does that mean? We have the opening price for the 7 a.m. opening, the candle there. We have the 7 a.m. We can see that we are in premium, and maybe, just maybe, this fair value gap in the form of a sell side imbalance could be respected to trade lower. But this is essentially all I look for in every day, in every session, in every week, and every month. So right now we are in premium. We just tapped in a premium array, not a PD array. It's just a premium array. We've tapped into one, and we may be looking for discount or fair value. In other words, back to this yellow line or anything lower. So this is essentially the key, the main point of what makes premium versus discount work. Trading above the opening price of the dealing range that you're actually going to be working with. If you're going to be working with London, mark out your opening price to know whether you're in discount or premium. If you're going to be dealing with the whole day, mark out your opening price for the whole day. In other words, the midnight price. If you're going to be dealing with the whole week, in other words, trading from an hourly perspective, for example, you should maybe be marking out your Sunday's opening price. Let's see where Sunday's opening price is quickly. We've got Sunday right there, and the opening price is right there, I believe, right there. So we have the opening price on Sunday. So if you're going to be working for the whole, if you're going to be using this as an analysis throughout the week, or you're setting up a trade idea to execute on and manage for the entire week. You'll probably be waiting for some sort of shift in structure here now to look for selling opportunity, because we are in an extreme premium for the week. We have now returned to fair value or lower to be looking for any buying opportunities. So the opening price, in a nutshell, is critical when trying to determine whether we are in premium or discount. Let me give you an example, even though I've already given an example with this random chart by describing and illustrating on the chart. But let me give an example that I have already planned out. Alright, so we have the Aussie Swiss chart from the weekly perspective. This is last month's price action, February 2024. So we have this sell side imbalance, buy side inefficiency that seems to be gravitating price, seems to be pulling price right now. So I paid attention to it, and of course with a couple other things like SMT divergence at the high time frame PDRA. I think I actually have a video on the channel where I was looking to see if we could get selling opportunities from there to the sell side liquidity. So then going down to the daily time frame, we can see that we've tapped into the consequent encroachment. Well, not yet. We got close to the consequent encroachment of the weekly CB. The consequent encroachment is the dotted line, the halfway point of the sell side imbalance. So price continued trading, and I wanted to see if we could get a possible shift in structure on a lower time frame. I left it to trade because this was already now in the middle of the week. I was now looking for any executions that I could take going into the next week, and I was not convinced yet until here. So this happened on Friday. Friday's price action played out, and we swooped the highs there. We swept the swing high residing there and tapped into the 50% mark of the sell side imbalance from the weekly time frame. So here I was paying very careful attention because I went down to the 4-hour chart to see if we could get a possible shift in structure. So right there we displaced lower and got a shift in structure. So looking at this swing low, we got a closure below it, and now we are here. So I know this is all contextual understanding. I know this is all narrative built from a high time frame, but I basically measured the swing high right there to the swing low that we just created now, and we can see, yes, this is not an opening price because I'm using IPTA and I'm using a few other things from a high time frame. The opening price for the month actually was what I used in the month of February, because if we remember, this is February's price action, and we can clearly see that the opening price is all the way down there. There is the opening price there. So this is the 1st of Feb. We dipped down in discount and went higher. So now we're here on a high time frame discount for the whole, premium for the month. And going down to the 4-hour, back where we were, I measured this range, and this was on Monday night going into Asia session, because I remember this. This was Asia session going into London. So I looked to see where we opened up for Asia. It was we opened up down there for Asia. Let's see. We can see this is the Asia session down there. In other words, the opening price is the first candle of the Asia session, which is all the way there. I don't like having all the illustrations on my chart for this reason. Everything just looks messy. So the yellow line is the opening price for the Asia session. I saw we went into discount and now in premium going into the London session. So I paid careful attention because I also know that London statistically makes the high or the low of the week more times than it doesn't. So I looked back at the 4-hour chart and noted this inefficiency that's in premium, because remember, anything above the blue line is my premium. So in premium for the month of February, we know this because of the high time frame that I just boiled down. We are in the premium for the day, of course, because midnight already opened and London kept pushing higher. So in premium for London, premium for Asia, premium for the month, premium for the day, into a high time frame PDRA, right? So we have this 4-hour CB, which I now had my attention on, with the stop loss being at the third candle, the first candle that started the fair value gap. So right there we got tagged into the trade. The minimum target is the swing low that we started the range from, because this goes back to discount. Of course, not back to discount for the month, because the opening price for the month is all the way down there, but at least back to the discount for the day and for the week, because the week just started here. This was Friday and this is Monday. So let's see how price played out. We can see it immediately went through the target that we had set. So this is essentially the concept of premium versus discount. Price always gravitates towards liquidity residing in premium and discount, and that's why we see tendencies of price to do something like this. It went straight to discount, gave us discount to come back up, came here again up, give us some more premium, and possibly gonna continue lower. So that's all I have for now. I just wanted to briefly touch on the concept of premium versus discount. I hope you found this insightful. I hope you learned something. So if there is anything else you may have as a question to ask, please do not hesitate to ask. For now, stay safe, good luck, and good trading.